Hello and welcome. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwagu. On the program today, Facebook set to open Nigerian hub next year in African Tech Drive. South Africa's Sasol pulls plug on $13 to $15 billion US gas to liquids project and plans to divest from Canadian shale. Plus, IMF says Zimbabwe's economic situation very difficult. But we'll begin the program with the markets looking in here in the African continent and starting off here in Nigeria. Unilever and Dangote Flour were the major drivers of the market at intraday as the gains recorded by those two stocks left the market in the green zone, 0.06%. South Africa's JSE index continued its slide, losing 0.65% at intraday. The market in Egypt was outperforming, staying in the green at 1.86%. Egypt closed higher, 2.32%. And then looking at the Middle East, the Gulf stock markets generally firmed at intraday, with Emma Properties continuing to rebound in Dubai from losses suffered in the run-up to its local development unit's listing. Dubai's index climbed 0.46% as Emma Properties added 1.3% to 7.90 dirhams, extending a recovery from technical support at 7.60 dirhams. The stock slid ahead of Wednesday's listing of Emma Development because of fears that the debut could go badly. In the event, Emma Development closed at 5.77 dirhams on Wednesday, only moderately lower than its initial public offer price of 6.03 dirham, and it edged up to 5.80 dirhams on Thursday morning. Another beating down Dubai stock, amusement park operator DXB Entertainment, rebounded 6.1% from near record lows in heavy trade. Saudi Arabia's index gained 0.86% as telecommunications firm Zain Saudi added 1.3%, and there in Abu Dhabi the index rose 0.3%. In Qatar, the index edged down 0.72% as Qatar Commercial Bank lost 1.5%, but property developer Edsden Holding, which had tumbled almost 60% this year amid a slump in the real estate market, rebounded 2.9%. Moving on to Europe now, where equities were lower in early trade following a sharp fall in Chinese markets and amid weak trading volumes across the world. Conrad Busen is waiting to talk to me. Let's cross over to Frankfurt. Good afternoon, Conrad. Thank you for joining us today.
Hello, Timmy. Nice to be back.
Great. Now, the Chinese market was sharply down today, while Japan's stock market was closed, as well as Wall Street, to the Thanksgiving holiday. Are you folks on European trading floors feeling lonely?
Well, it is a bit lonelier than usually. It's been, a bit lonelier all week as the Americans were getting prepared for their Thanksgiving holiday. Lower volumes got to be felt here on the Frankfurt trading floor as well. America is such an important part in worldwide trading that as soon as they get on a holiday, it gets to feel everywhere in the world. But I have to say that also the United States today is making a lot of the talk on the trading floor here in Frankfurt, as last night the minutes of the last Open Market Committee meeting came out. You know, this Open Market Committee, that's the monetary policy makers of the Federal Reserve, of the Reserve Bank of the United States. And those minutes show that not only can we expect another interest rate hike in the United States this year, but also the monetary policy makers are concerned. They're concerned about inflation and not so much about potentially too high inflation in the United States, but they are concerned that inflation might not be strong enough in the mid and long term in the United States. The relatively weak productivity growth in the US might mean that inflation, consumer price increases in the US might remain significantly below the 2% target for a while. And that, of course, raises many questions. It raises questions about the ability of American companies in the future to demand higher prices from customers, to, cash in higher earnings. And that's why many people here are talking about it. And look at what the DAX is doing today. It's again more or less around the exchange line. This looks more positive than it actually is. The DAX is not really moving a great deal, and it's been there more or less all week.
The DAX is actually lonely. Well, we'll wait till December to see what Fed has to do. Now, let's look at the UK. There's so much in the UK Finance Chief Philip Hammond fancy red-coloured budget box. But tell me, what's important there for traders and investors in Europe in the red box, and why?
Well, you know, we're here on the European continent. We are part of the European Union, and we think that it's a good idea to remain in the European Union for Germany, for France, for all of the members of the EU. But as you know, the UK is about to leave the European Union, and that's why the most important piece of information that Philip Hammond gave today, from the point of view of people here, was that he announced that the UK's government would set aside an extra £3 billion for Brexit contingency planning. He wasn't very precise for what this money might be needed. Today he gave an interview where he talked about IT systems that the United Kingdom might have to build for how, you know, animals and foodstuff were transported between the UK and Europe in future. But of course, many people here wonder what else this money might be needed for, and much more importantly, whether this money might be enough. And the answer that most people here would give you is no. The Brexit divorce bill is expected to be much higher than the £3 billion that the government in London has set aside now. And also, especially as if there is a hard Brexit to happen, then you know, the UK government will have to spend much more. Another important piece of information